my name is Khan. Welcome to the next episode. This episode is a very important, guys, because we are going to talk about liquidity, which is a fuel of this market. As a being human, we need oxygen to live on this planet. Same thing apply in a liquidity. Liquidity is a necessary to move any momentum in a bullish or bearish in any market like forex, cryptocurrency, stock market, bonds, and any sector, right? So what is the liquidity? Actually, liquidity is a transaction between buyers and sellers, and banks monitor your entry, monitor your stop loss, they monitor your target. They don't care about your structure, they don't care about your order block, imbalance, even your stop loss, even your support resistance, Fibonacci level, even your any kind of strategy, even your indicator showing your buyers, even your indicator showing you buy or sell. They don't care anything. They trade only based on liquidity, number of orders. Where is the number of orders? Where is the number of entry? They trade based on it, right? They don't trade any kind of structure. They are structure creator, right? Let me show you that how banks and institutional read our entries, our structure, our entry criteria, stop loss, target, everything. And then what happened? We take entry and then hit the stop loss and trade going well as I predict, correct? So how we can avoid it? There are so many type of liquidity, but we will focus on major liquidity like support, resistance, and structure. Okay, most of the SMC traders don't know exactly how mark the structure correctly, and some people know order block is everything, break the structure, order block, and sell or buy. No, they create another type of liquidity. So we will discuss all types of liquidity. We will focus on major types of liquidity. So let me show you how banks read our stop loss, our structure, and they how manipulate, right? Okay, so in this example we can see market trend is a bear. So probably everyone looking here for sell, right? So how even every traders looking here for buy or sell? Let me show you exactly. For example, this is a bearish market, market creating bearish downside. Okay, so this is a low, was recent low, and this was recent lower high, correct? And market break this structure. So after broken this structure, what happened here? After broken this structure, everyone looking here for sell, right? As a smart money trader, what are you looking here? You are looking here for sell. So where is your sell? On this order block, correct? Because structure break and we are expecting price push higher to fill this order block and then push downside. But this thing doesn't work. Let me show you exactly how. And another type of traders who trade based on a trend line, so they mark this trend line like this, okay, and they looking here for sell, where they are looking here for sell on this test. Let me show you exactly. I'm sorry. Okay, they are expecting another time price tap here, and they expecting price go down because market momentum is a bearish. But another type of traders who trade based on a trend line breakout, market break the structure, they expecting buy on this trend line, correct? And they expecting price go for upside as a reversal. So everyone have a different view, right? So another type of traders who trade based on a supply and demand, support, resistance, so they mark as a demand because price move here to the upside. They expecting price once again tap here and then push higher. They buy here, they got stop loss. But another type of traders, they sell again, break this low, who sell here and here and here and here. So where is your stop loss? Everyone selling stop loss above here, and some members who sell here, like on this trend line, they expecting price go downside, they also putting the stop loss just above it. Okay, then what happened? Price push higher and showing some reaction. Okay, then more position adding here for sell, they again putting a stop loss just above it because they expecting this is a recent high. Okay, and then what happened? Price go higher, and some people introduce here for buyers because trend line has been broken, and these all stop loss collect by the banks. Okay, and then what happened? And price push downside, and the buyers also get stop loss. Why this happen here? You have to understand the liquidity, right? Let me show you exactly. Actually, banks don't know where is your trend, where is your patterns. Okay, they don't care about your pattern, they don't care about your structure, they care about only your stop loss, entry and target. Okay, so everyone selling and putting the stop loss just above it. Okay, and in a rare case, some people putting the stop loss just above it if anyone sell here, right? So how they manipulate? They know, they read our stop loss, not your structure, not your order block, not your strategy, any kind of strategy. They don't use any kind of strategy. Okay, they read only our stop loss, they read only our entry zone. Okay, so price push higher and collect all stop loss and then push downside. So these structure automatically create here. Okay, they are not trade based on structure, they are structure creator. Okay, because they read our liquidity, they read our stop loss. Where is the money? Money is here. Okay, money is here, and people sometimes what happen? Market push more higher. If stop loss just above it, then market collect all stop loss and go downside. Sometime if market is putting the more stop loss just above it, then we can see lot of time structure failed and sweep the and then push downside. So how we can identify these things? I will explain everything in a details one by one. Okay, this is a very important and necessary to know where is liquidity and how we can take a trade. You have to wait for the sweep the liquidity, then you can take a trade. Okay, then very highly chances your trade gone in your direction, as per your direction, as per your plan. First mark the correct structure, then identify the where is liquidity, wait for the liquidity sweep, and then looking for setup to buy or sell. Then you will get high quality setup. You don't focus on multiple things, you focus on main thing about structure and liquidity, structure and liquidity. I don't believe in to give you unnecessary lecture 12 hours, 13 hours. Okay, I believe in give you some quality content which is actually you need to know, right? So let me show you some briefly example to how retailers and smart money traders trap and how we can different from others. Okay, starting with support and resistance type of liquidity, because support and resistance is the most usable strategy in a retailers. Some people trade based on only on resistance and support, and I've seen a lot of YouTubes and internet and Instagram, they trade based on resistance support, and they said this is a historical demand and supply, this is not be broken. But in this case, most of the time those support and resistance must be broken. Why? Because they create ton of liquidity. These things work in everywhere, in a forex, cryptocurrency and stock, everywhere. Okay, so let me show you exactly how it's work. You can see here, this is a demand zone. Okay, one person who is looking here for buy, because they expecting price tapping here multiple time and they are expecting price go higher. Okay, but another type of traders who are trading based on the trend line. Okay, so what they expecting? They expecting price broke the trend line and they are looking here for sell, and they are looking here for sell. Okay, and after broken this zone, they everyone looking here for sell. Okay, and another time what happened? Price create this channel. Okay, which is also a reversal pattern. Okay, these are showing 3-4 types of reversal sign in a bearish market. What happened here? Market collect all liquidity. First is here, this is a support and resistance liquidity, and then trendline liquidity, and collect all liquidity, and market tap on the extreme order block and push higher. So this is happen every time, most of the time with the traders. So you need to understand where is the liquidity. First identify the liquidity, then structure. What structure you are saying? Structure is a bearish or bullish, then you have to wait for the liquidity, then market liquidation, and then take an entry. Okay, same thing apply here. As you can see here, if I mark the first structure, which is here, the recent swing low and recent swing high. Okay, so as you know, once price broke the structure, which is here, okay, this is a equal low. Okay, you can say slightly market take the low and then push higher and push downside. So this one is not break of structure, but most of the traders looking here for buys, and they putting the stop loss just below it, but we mark as a break of structure, correct? So after broken this structure, so what is the entry criteria? As a smart money trader, if you are thinking, so what most of the traders thinking here after broken this structure? Most of the people looking here for sell. Why? Because the structure broken and they are anticipating price push downside on this order block. Okay, and some people looking here for sell here. Market take the liquidity and they expect another sell entry is here, correct? But both entry criteria is invalid. Why? If you look in a left side, this is a single leg move here. This is a single leg move. Price must be taken out to confirm this low, because this low is not confirmed until broken this high, correct? As I mentioned in a previous video in a first part, that how we can mark the correct structure. Okay, so some people say this is a first high, then this entry is a valid. No, this high responsible for this move. Okay, we are talking about this actual move. Okay, so in this move is our main move. So price must be taken out, then this low is a confirm, and after taken out this high we can sell. Okay, so we will discuss in this all thing in a details in a entry parts, which will be next part. Okay, so what happened here? I'm just talking about liquidity and traps, how smart money traps and how retailers trap here. So they are selling here and again selling here and again selling here on this order block, correct? So they are selling many times, and few retailers who trade based on support and resistance, they are also selling here because they are expecting this is a strong resistance and price never push upside, and they are expecting price must be go downside, but price going downside. But when? After taking the stop loss. Market collect the stop loss, all stop loss, smart money and retailers stop loss, and this is a first high which is must be taken out before go higher or lower. Market never go up or down in a single move, like higher high, higher low, lower lows. No, they first trap and then go down or up. Okay, so market take this high and mitigate left side order block, which is here. Okay, market type this order block and then push downside. After mitigate this order block, this entry is a valid, and you can stack multiple entry here to here. Okay, so this I will discuss in a next upcoming chapter, as I told you. Okay, so this is kind of liquidity is creating by retailers and smart money traders. Let me show you one more example. In this case, trend is a bearish. Most of the traders looking here for sell, which is correct, and some people looking here for buys, as per the strategy. But how they trap both type of traders, let me show you exactly. You can see here market break this structure, which is correct structure as per our strategy, our plan. This is a correct structure, okay. And one more thing, this one is another structure, okay, because market take recent high is here. This one is a valid structure, this one is a valid, and another structure is here, and because market take this high, correct. So this is our plan, but why and how other people's looking here for buy or sell? Exactly, I will show you. Some people mark this is a trend line, break the trend line and looking here for buys. And another type of traders who trade based on the supply demand, they mark this is a resistance and they hit this stop loss. After hitting this stop loss, okay, hitting the stop loss, market push again downside, okay. And another type of traders who trade based on the order block and strategy, like they mark this is a structure here and they anticipating this is a bearish order block and they are looking here for sell, because they expecting here price is a bearish and they anticipating price must be go downside like this. Okay, so what happened here? After broke this structure and market tap here and showing some reaction to induce people, and then what happened? Price go higher, took the all stop loss, collect this all stop loss here, okay, and then tap on this extreme and this high act like a liquidity, okay. And same thing apply here. This was a first high. After broken this, everyone trying to sell here. This is the order block trap. And then what happened? After broken this high, you have to wait for the mitigate something which is here, so you can sell here. All right, so this was the liquidity trap and how we can identify them. These are basic thing, but you need to understand how it's work and how manipulate us. So in the next chapter we will discuss about advanced liquidity, how we can take advantage of the liquidity, how price action actually work, how banks actually work, and how we can trade on their footprint, okay, because they don't trade structure, order block, anything. They don't take trade any kind of strategy, as I mentioned you, and I will show you exactly how we can trade like them exactly, okay. So in the next chapter we will discuss about everything in a details about liquidity, which will be very powerful. I will say only one last thing: structure plus liquidity equal to high quality setup. Don't focus on many things, focus on two things, you will be great trader. Seriously, focus on two things: structure plus liquidity, structure plus liquidity. You don't focus on lot of things, and I don't believe in give you unnecessary lecture to like 15 hours 20 hours to you and give you 12 lesson 15 lesson 50 lesson.